Okay, okay.
Starting up right now. No, Aaron, so those four pairs are the ones that the only ones that you saw, or is there more?
It was those and a few more, but they're starting to retrace right now, so hopefully they push back up before 6 o'clock. So we'll see in 30 minutes or 20 minutes.
Yeah, we'll check it out. All right, cool. So let's get started, guys. So if you guys have any questions, feel free to put them in the Q&A. You can go over any pairs or go over any trading strategies that you guys want to see, or answer any basic trading questions that you guys have. Meanwhile, we're going to look for entries for the 6 p.m. candle close. And once we're done with that, we can start going through the questions. But yeah, give me a second. I'm going to start looking through the pairs real quick. All right, so let's get started. All right, so let's start with OddCAD. Yeah, we didn't call this iron.
Nope.
Yeah, so this was an entry that I saw earlier. I forgot why I didn't call it. Let's see if there's a close SR level. No, looks good to me. Let's go on the 8-hour. Yeah, we should call this one. It's in profit. Yeah, so there's no resistance here. So this is actually a really good trade. I can't remember why I didn't call it, but let's see. So if you look at it here, looks like it shot about 30 pips. So that's pretty good. It's all right. We're gonna keep looking through the other pair to see if there's any other entries. Let's see odd CHF. There's no entry here. We still have this active from last week. You can see the alerts are right here still. So TPs haven't been hit yet. I think one TP was hit last week over here. For our second entry, I think we have 2 active entries for odd CHF, but it looks like we still have TP1 right here, TP2, and full TP for the other position. Both the stop losses are down here, so they haven't been triggered yet. But it doesn't look like something that we'd want to enter, because you can see right here, pretty much price just goes from zone to zone. So we don't want to enter anything because we don't want to be stuck, trading within the zone. So let's keep going down the list. JPY, this is one of the trades we just had. It actually just hit stop loss. I hate when this happens where it just hits stop loss and then it shoots back down. I was just telling Aaron that this might end up shooting back down this way, but it's fine. We can't win every trade, so we're just gonna take this L and move on to the next one. So I'm just gonna delete these right here because we already hit stop loss. That was a weird move. Looked like it was coming down, so let me zoom out real quick. I'm just gonna reanalyze it. So we took this trade here because price came up here, rejected for a double top, came down, closed below this zone right here, and then we took the entry. Unfortunately, price ended up reversing right here immediately, came down a little bit, and then did the same pattern again right here. So this is such a weird pattern because I don't see this too often, where it pretty much lines up perfectly like side by side like this. So this looks like a brand new pattern that I've never really seen before. But yeah, that pair has been moving pretty weird since last week, so we're just gonna avoid that. There might be an entry here, but the only problem is that it's close to the resistance. So even if there was an entry, we wouldn't have taken it. We'd only take an entry if price was to break above this zone right here. Odd NZD has a buy bias right here. I'm not sure why we didn't take this trade. There was an entry right here actually. Could have caught about 30 pips right there, and then it's rejecting off this resistance right here. So let's try the next zone up here. And it looks like, if price breaks above the zone right here, it might go up further, but let's see how much space is here. It's only about 10 pips. The spread's about 5 pips, so it's not really worth taking. Because the problem with that is if we do take a buy here, it might come up, reject off the zone, and then come back down. So that's why we'd avoid that. We would take a buy entry if it closes somewhere above here, because then we'd have free range to keep shooting on upwards. But where it is currently, it doesn't look like there's very much space for it to really breathe. So we wouldn't want to take this. Even right here, you can see price is rejecting off this resistance. So what might happen here is if we get a sell signal in the opposite direction, price might come down to this zone to test it. So if it rejects off this zone, we get a sell signal. Odds are price probably going to come down here, test this zone, and then possibly shoot up from here and make a break up upwards. But we won't really know until price moves a little further. We don't really like trading in the zones like this, because the thing is, when you're trading when price is consolidating in a zone like this is where you get caught in some fake outs. Like right here, if you were trading in this zone right here, you wouldn't know if price was going to shoot up this way or shoot down this way. So that's why we like to trade outside of the zones. Let's see, odd USD, there's nothing here. There would be a buy entry if this candle closed above this zone right here, because then this would provide for a breakout to the next zone upward this way. Let's see, odd USD stop loss hit. Aaron, do you know if this hit? Is this an active position? I still have an alert for this one.
AUD, USD.
Yeah.
That could be from maybe like 2 or 3 weeks ago, bro.
Yeah, I think so too, because yeah, the stop loss is pretty far. It hasn't been triggered like since June 10th. So it's like more than a month ago. We might hit full TP actually, because I don't even see that. Like, I'd have an alert down here for full TP if it was still active. So I'm just gonna delete this. Yeah, we had a lot of pairs that we took last month, and they just never moved. They was just bouncing around back and forth between the two zones. So we weren't able to really make too many movements. Same with this month. I'm not sure if you guys are familiar with how the market moves in seasons, but the market generally moves slow during the summer, because in the summer, that's when the market makers and institutions go on vacation. I thought it'd be a lot slower. Not slower, but I didn't think that as many people would be going on vacations because of COVID, but it looks like people are still taking a break, because you can see obviously the volatility is super slow compared to how it was moving, say last month right here in June. Like in June, there was like 300 pip move. You look right here in July, price has only moved about, let's see, price has only moved like about 100 pips for, and we're halfway through the month. So you can see that there's a huge difference in volatility from, June, March, May, April, compared to July right here. It's moving really slow. We still have this active position here. I think it should be fine. It looks like, what might happen here is it might reject off this zone right here and then come back down this way. Price hasn't closed within the zone yet, so it's not actually in the zone. It's just testing the zone right now. So, what we would be waiting for is for price to close again below here to confirm the rejection. Let's see. KJPY. Similar with the other pairs, there's just nothing to take right here because it's stuck within these zones. Like I mentioned earlier, price rejected from this zone, came up here to this zone, rejected off this zone right here. You can see right there, there's a wick. It rejected off this zone, so it's pretty much gonna just keep going back and forth until it breaks out of these zones. So until price breaks either above here or way down here, then we could look for entries. But for now, there just isn't really much to do with certain pairs that are just moving really slow. CHF JPY. Aaron, do we have this as an active trade? I don't think so, right?
Yeah, I don't think so.
Yeah, I don't think so. It doesn't look like something that that we took. I mean, I would have marked it if we did, but it doesn't look like anything's there. Right here, we have a buy bias for Euro odd because the last signal was a buy momentum signal. So as you can see here, we got this buy signal and price shot way up here. However, there's no entry right here. In order for us to enter a buy, a bullish candle would have to close above here. So if a bullish candle closed above here, like it did right here, odds are price is going to shoot up and test the next zone like it did right here. That's what I'm anticipating here. So if we get a bullish candle and then it closes above here, then we can anticipate that to try and test the upper level again. So there's no entry there, but once we do get an entry, I will take a look. Wait, Euro odd? Yeah, we don't have, do we have a position for Euro odd? I got a stop loss that's way up here. And then I got a TPs that are way down here too.
I think it could have been from last week.
Yeah, guys, we had a ton of, it seems like it was, because right here it looks like it stopped and then it reversed this way. But this is a pretty big zone. I'll have to double check, but I'll check the charts later. Oh, bro, this is the one I showed you earlier, man. We should have took this one. So I don't know what happened here. We missed this call for whatever reason, but just looking at it from here, you guys can see that there would have been entry here. Like I mentioned before, you know, when you have a buy momentum candle, we're generally looking for buy entry. So as price breaks a zone like it did right here, we would have entered right here, and we would have been in profit about, let's see, yeah, about 70 pips. I can't remember why we didn't take this trade, but you know, it would have been a good trade. You know, the market's just been moving really weird. It's kind of hard to detect, you know, the direction of price. Oh, fuck, we forgot this one too, right? This
Oh
is
yeah,
during the spread though, 10 o'clock. There's actually some pretty good entries that are available. I think it'd be too late to call this right now, but oh, you know, I think it was because the zone was too close when we saw it.
like 30.
Yeah, it's too late now because it's already in profit.
I mean, unless you want to put a buy limit.
Nah, it's too risky. Yeah, it's too risky. We have this position that's open right now for EG. I'm not sure if you guys are still in it. We did hit CP1. It was down here. I'm sure you guys have noticed I've been putting 3 CPs. The reason for that's because of the low volatility in the market. You know, the market's moving too slow. So the thing is, we have to be able to eliminate our risk. Generally, I know a lot of people get the misconception that we put our TPs here. These TPs, TP1 and TP2, they're not real TPs. Like we're not putting we're not exiting at these positions. What we're doing is once price reaches this area where the TPs are, then we move our stop loss to that point. So if price is to reverse like it did right here, I already got out at TP1 around here for about 15 pips, I believe. So I got out right here because I moved my stop loss in profit. But if you guys are still in this trade, it still looks fine. It looks like it's going to reject off this support right here and shoot back up. But generally, you're not supposed to put your TP at the profit targets, like the lower profit targets. They're just meant to be areas where you're supposed to move your stop loss. So once price reaches those areas, that's just a reminder to tell you to move your stop loss in that area so you can eliminate your risk and guarantee profits. You know, with regard to price, if price is to reverse like it did right here. But it still looks fine. I'm still monitoring it because we still take I take a full position, but it's not a big position to go for the full run. It's just to keep a marker so we understand you know, where price is during that specific period. So right here we have another active position for EJ. I think we hit we hit TP1 for 20 pips right here. I think I probably got kicked out of this trade too because once it reached 20 pips, I moved my stop loss. So let me see. Yeah, so 20 pips is over here. It actually pushed up about 25 pips. So the thing is, once it reached this area, I actually moved my stop loss to 20 pips right here and I got out. The only reason I'm doing that now is because, you know, the market's been super unpredictable. It's not safe to really let your trades run freely because, you know, you never know when Trump's going to say something over Twitter or there's some COVID news that becomes released and then it just ends up shooting price, especially if you're trading a pair like a JPY pair or a CHF pair, because the JPY pair is a safe haven currency. So anything paired with JPY, generally, you know, if there's bad COVID news, generally JPY would gain in strength, the price would go down. It's kind of like what happened right here. So you can see here price was going up when the week opened. So this is about Sunday, price was going up. And then there was some bad COVID news from the weekend, and then it dropped down a little bit, and then it recovered back up. So, you know, that's something to keep in mind when you're trading specific pairs like JPY pairs or CHF pairs, because they're both safe haven currencies. So they get affected with COVID news all the time or anything that's going on with the economy. So what else we got here? This is another active trade, Euro NZD. This hasn't hit TP yet. TP1's right here. And this is an example of what I meant. So I have alerts set here for TP1. So once price reaches this area, I move my stop loss to here, just so I can guarantee those profits. Again, when price reaches TP2 up here, I move my stop loss to here. I don't put my TP there. My TP is always going to be at full TP because I'm going for the full TP, but you also want to cover your ass in case price reverses like it did right here. Well, it didn't really reverse, but it retraced back. But you know, you always want to exercise proper risk management for every single trade because you never know when price is going to reverse on you, especially during, you know, the times that we're trading right now with COVID affecting the market pretty heavily. Damn, man, we should have called this one too. There was a bunch from the last candle close, but we just didn't call them because Oh, because Trump was speaking, of course. Yeah. So that's why we didn't make any calls earlier. We just made a couple, which kind of screwed up our positions, like our EN position right here. It was doing perfectly fine. It was in profit, about 10, 12 pips, and then Trump started speaking and then it went down. That's probably what happened with all JPY too. Trump was speaking, obviously, bringing morale, making it seem like the country's doing well. So that's why price came up.
Hey, and
But
we have high impact JPY news later on. What about 2 hours?
yeah,
And after that, it's 5 hours later.
it's in 2 hours. Let me
Yeah,
pull that
it's
up real
it's
quick.
two separate JPY news.
Yeah, I mean, if that's the case, guys, I don't think we're gonna make any calls for the 6 hours. So I'll mark them up, but I'm not gonna make any specific calls. Let me see right here. Yeah, so we've got all day. I mean, it's tentative JPY news, and it's the Bank of Japan. So this is obviously going to affect the market heavily. You can see the red tabs. So we're probably going to hold off until a little later, maybe till 10. But I'm going to mark up some pairs just in case. But I don't think it's a good time to really enter anything new, because this is going to have a huge effect. They're going to be going over the outlook of their economy. Obviously, it's not going to be good, because COVID, COVID does affect Japan too, and that's probably what spiked our JPY right here. I mean, I can't say for sure, but that's a good indicator telling you that if price is going upwards, this means that the AUD is stronger than JPY. If price is going down, this means that JPY is stronger than AUD. So the thing is, it shot up right here. So prior to the news event that's coming right now for the Bank of Japan outlook report, they probably predicted that the news wasn't going to be good. So that's why the JPY is weak right now, and that's why price went up. But that's a good indicator to probably just hang tight until we have more confirmation as to how price is going to move. For our positions that are still active, like EN, this is fine because we have 135 pip stop loss. Our stop loss is probably not going to get triggered. Same with EG. It doesn't have to do with any JPY pairs. It's it's euro versus the pound, so we're probably not going to get movement to London session anyways. EGA, I don't know if you guys got out of this. I got out of this, so I'm fine. But as price moves up further, you should move your stop loss and profit at least, just in case something happens due to the JPY news. Let's keep going. So there's no entry here. You can see price is testing the support down here. So the problem with that is price is probably going to reject off it like that. So obviously we don't want to take a sell right there. It's probably worth time to take a sell. So right here we have GCAD. GCAD looks like it could be a decent buy. So if this candle closes above this support, resistance up here, then we can probably catch this for a ride up like that. So I'm gonna mark that. So maybe later we can probably take that trade. Let's see, GBP CHF. Same with right here. It looks like all the GBP pairs are actually not GA, but GC is bullish, and then the other GC, GBP CHF. If this closes above here, then this could be a good buy entry as well. But the problem with this is it doesn't look very bullish. So I don't think it's even going to push that far. I think what I'd probably want to wait for is a sell signal. So if a sell signal comes down, I'd probably want to take that, because you can see right here, price is obviously trending down. From right here, it came down, came up, came down, came up, came down. It just kept establishing lower lows and lower highs. Right here, price came up this way, but it looks like it hit some strong resistance right here. So if we mark this right here, there's actually a pretty strong resistance point for I guess you can consider it a double. No, it's not a double top, but it's just a strong resistance point. So it rejected off there, and it can be establishing a lower low. So if this was the high here, this would be the lower low, and then if it stops somewhere around here, that'd be a lower high and continue downwards. So I'll just mark it. I'm probably not going to take it, but in case it does come down, then it might be good. Aaron, what do you think about GJ, bro?
That one looks
This
pretty
could
good,
probably
bro.
be a, yeah.
The candle
I'm just
came
gonna
back.
move this down right here.
Buy signal came back. Oh shit!
Yeah. So.
News. Fuck.
Oh yeah, but we do have news. So we won't take that. I'll just mark it for possibly a late entry. But yeah, right here, that was a nice move. It's like 100 pips right here. So this would be a good buy if we got to that point. we'll just keep looking. Right here for GN, there isn't really much of an entry or any opportunity. As you can see right here, price is literally in consolidation. So it's not really a good pair to be trading right now. Let's see. So GU, I was looking for a sell on this. If price was to close below this zone right here. However, it did close above. So we would probably have to wait for it to either give us a buy signal for us to take a buy in this direction, or for it to come back down right here and close below the zone, providing for an entry in this direction. So this would be about 22 pips. It'd be better if it closed farther down here for more cushion. I've been looking at this NZD CAD pair for a while. I wonder if CT is in here. Yeah, I mean, CT, I don't know if we're looking at this pair, but it was one of the NZD pairs. We've been waiting for a buy signal somewhere over here. I thought this buy signal was going to come over here or somewhere over here, but it never came. So the thing is, once we do get a buy signal for NZD CAD, this could actually be a good buy entry, because as you can see here, we're going the higher time frames. There's no resistance that's been established. There's literally, it's a free zone right here. So it already rejected off this point on the daily. If it continues upwards, it's like endless possibilities right there. This is a daily chart too. So you can see, it's very strong. This is a strong resistance. It finally broke through. It broke right through this resistance right here. It was to break, retest, and then if it breaks, another breakout if we get a buy signal. So if we do get a buy signal on this, this would be a great entry right here. So I'll keep an eye on that. Let's mark it. NZD CHF. It's nothing right here. Same situation. It's just in consolidation. So we're going to avoid that. Let's see. NZJPY is kind of weird. It doesn't have, I mean, it's been getting buy signals, but well, this was invalid, so we wouldn't have taken that. It has one right here. So, I mean, what might happen is it might reject off here if we get another buy signal, but we don't have one right now. So until we get another buy signal, this probably wouldn't be a good entry. NU, let's see. Yeah, nothing there. USD CAD. Yeah, it doesn't look like there's anything there either. USD CHF, nothing there. UJ, nothing there. Plus we have news coming up. So I think that's it for now. The only ones that I really saw was GCAD if it closed above here. GBP CHF if closed above here as well. It's pretty far, so I don't think it's going to make it that far. GJ right here. If this closes with the buy signal, and NZD CAD if we get a buy signal right there, and lastly NJ if we get a buy signal there too. Yo, Aaron, I thought you sent me more. Did you see anything else? Let me check. I'm gonna
Like 5 or 6, I think.
let me check. So you got GJ. We just looked at that already. NU, we looked at that. Wait, what'd you see on NU? I didn't see anything here.
No, it was
Oh, there was a buy signal earlier, right here.
Almost everything we traced.
Yeah, you got NJ. I got that marked up too.
That had retraced.
And you got GU. Yeah, it looks like a lot of them are traced. It looks like, when you looked at it, there was probably a buy signal here, but there's not one now. So.
Well, you talked about G, right?
Yeah, I'm on it right now. If we got a buy signal, it would have been good, but we haven't gone there yet.
That one had disappeared too.
All right, cool guys. So it doesn't look like there's many entries available. Plus, like I mentioned earlier, there's high impact JPY news coming up right here. We had the Bank of Japan outlook report coming out. Obviously, it's probably gonna be bad news because the economy still hasn't picked up in majority of places. And then their monetary policy statement. So we're probably gonna wait for this to happen. After that happens, then maybe we'll look for trades. But looking at the news right here, I don't really see anything. Consumer sentiment drops again as COVID second wave hits. So as you can see right here, pre-news, there's a ton of bad news that's going on. The Australian news right here, they're talking about the second wave of COVID. So we might see a drop for US 30 maybe. I don't know, we'll have to see. I'm gonna start looking for trades around 6:30. So let's see, it's 5:50 right now. So 8:30, 6:30. All right, so once price crosses this point, I'm gonna start looking for US 30 entries. So I'll turn on my alerts just so we could make sure I'm keeping an eye on it in case something appears. All right, so that's on right there. All right, cool. So I'm gonna go down the questions now. So if you guys have any questions, put them in the Q&A. If you guys put them in the chat, I'm probably not gonna be able to see them. But if you guys put in the Q&A, I'll make sure to get through to your question. So let me just get, so Khalil's asking, how do I get that system you use? Khalil, so if you go on our website, let me just pull it up here. Sorry, let me look for it. All right, Khalil, so if you go to our website, kttrades.com, this is what the website looks like. Once you go here, depending on what you want to sign up for, the signals or the strategy, if you just want to copy my trades, exactly how I take them, you can just sign up for the signals. If you want access to the K2 indicators, which are these indicators on the chart, then you would have to have access to the K2 strategy. So if you want access to the strategy, you can just click here, and it'll pull up the course right here, and then you can sign up on this page. And then if you sign up on this page, you'll have access to the course. Let me pull up the course for you guys. Let's see if I can get it for you guys. So the course is, sorry guys, taking some time to load. I gotta pull up the actual course. All right, so if you have access to the course, it's going to look like this. So if you have access to the K2 strategies, this is what it'll look like. We'll have the getting started tabs right here, pretty much with all your unique links to join the premium groups. My watch list here, if you want to see every trade, every pair that I follow. So let me move to the bottom. So this is my watch list here. You can download it and then just export it to your trading view. And then it has pretty much all the pairs that I follow here. So if you want to trade exactly what I trade, you'll have access to my watch list right there. And then, the intros right here, if you have no experience with Forex, all the trading view tools and functions that I use, I pretty much go over every single function, basics with trend lines, support resistance. And then this is, where you learn the actual K2 strategy. So right here, we have the K2 intraday strategy. This is one of the basic strategies you can learn, the momentum strategy, the scalping strategies right here if you like to scalp, descriptions of our indicators, the K2 zone trading strategy that we use for our signals right now, and then the newest indicator, the K2 pivots, which I'll be going over a little later. But yeah, if you want to sign up, just go on our website at kttrades.com. And then I just click on the K2 strategy course up here. And then once you click on that, you can get access to the course, and then you'll have access to all of the K2 indicators. So if you're not familiar with the K2 indicators, I'll show them to you one by one. Let me just open a separate chart so I don't mess anything up. All right, so I'll just go over this real quick so that I can show you guys, or show the new people here what the indicators do. So the first indicator that I'm going to go over is going to be the K2 momentum indicator. Basically, what the K2 momentum indicator does is it displays where the momentum price is going. So if you have a buy signal like we do right here, where it's green and it matches with the green bullish candle, you can see momentum slowing upwards. So if you took that trade right there, you could have made, like 20,000 pips. Not saying that you would make that because we're looking at US 30, but it just shows the possibilities here. And right here, this would be a valid sell signal. It's a red sell signal with a red bearish candle. And if you took this right here, you could have wrote this down for, another 20, 30,000 pips. But these are meant to be used in conjunction with other indicators. So that's one indicator that we have. That's the main indicator. Basically, that's our catalyst whenever we want to enter a trade. Our other indicator is going to be the K2 trend meter down here. So as you can see right here, this is the trend meter. When it's red, this displays an overall trend downwards. If it's green, this displays an overall trend upwards. If it's blue, that means that price is consolidating, as you can see right here. See, it's blue down here, and you can see price is going sideways. So this gives you a good overview as to how price is moving. So if it's green, price is going up. Blue, price is going sideways. Red, price is going down. And then if you tie that with the K2 momentum indicator that I just went over earlier, see this, if you match green and green right here, you would have taken this trade because you knew price was trending upwards, and then you had the momentum swing upwards right here. So you could have taken that trade right there for a buy, and then you pretty much could have rode this all the way up for a nice win, 20,000 pips. So those are the first two indicators. The other indicator we have is the K2SR indicator. This is a version 1 indicator. Basically what it does is, as you can see on the chart, we have this red and green line right here. What that does is it automatically plots the nearest support and resistance on the chart for you. So as you can see right here, here's the resistance and the support, and as price moves, the resistance and support adjust with it. So it automatically plots the support and resistance on the chart for you, making things so much easier if you like to apply strategies like a break and retest strategy, or some type of trend line breaking strategy. So right there, you can see it adjusts. And if you tie that with the momentum indicator right here, if price was to get close to the resistance or support right here, obviously you wouldn't take a trade because it rejects right off it. So right here, you can see price came down, came up, rejected off the resistance, came down, came up, rejected off the resistance again. And this makes things a whole lot easier. If you want to take it up another level, you can use the K2SR V2 indicator. And this is way better because instead of just seeing where the closest support resistance is, you're going to see where all the nearest support resistance was, so far back. You can set the data right here. I have it set to 100 candles back. So that's 100 4-hour candles back. And as price moves, you can see that new zones are going to be created. So if you know where these zones are, you're going to know exactly where price is rejecting from, because price usually follows previous historical data. You can see right here, price came up, created this resistance, came up again, it rejected off this resistance, and then it broke above. So all it's probably going to continue in that direction. See, you can see right here, this zone that it creates a very strong zone. So the thing is, when I see that, I'll just draw my own zone around it. And then you can see price came up, rejected. Price came back up, rejected, broke, retest, and then broke up again upward. So if you bought right here, you could have caught this for, let's see, for about 15,000 pips. Actually, that's a lot of pips. And then this works the same way in the other direction as well. So right here, we have a sell signal. You probably wouldn't want to take the sell, or if you were to take a sell, you'd exit before it got to the support, because obviously, price came down from here and then rejected off the old support that was established earlier. And it's perfect. You see that it established another resistance up here. So it has established that, obviously you wouldn't take a buy here because price is probably going to reject off it, just like it did right here. So if you have these indicators, so you can see right there, it established a really strong support right there. And then it rejected off, just like I said. Like I mentioned earlier, it usually rejects, and then shoots upwards. So now that it broke this resistance right here, odds are price might come down and retest this, or it might just keep continuing upwards. So if you play this forward, it did exactly what I said. See right here, I did that right before I even showed you guys. It came down and then it shot back up. So if you guys have access to the K2 indicators, this makes a huge difference. It's pretty much just like a little cheat code for you guys. And then, okay, so our last indicator, so I'm gonna take all these off. This is the last indicator that I just released recently. This is gonna help you identify trends. So you can see right here, when price goes below the pivots and then it spreads out. So if price is below the K2 pivots right here, and the pivots are angling in that direction, this will establish a strong downtrend. So the cool thing about this is, if you have the K2 TS, see this right here? If you see price was below all the pivots and it's trending down pretty heavily under the K2 pivots, you just enter a sell when you get a sell signal right here. And then look at that, you would have made 40,000 pips right there. It's a nice win. But I'll go over the strategy later if we have time for it. But this is also covered in the course. So if you have access to the course right here, let's see, the K2 pivots strategies right here. So we have the K2 pivot strategy for scalping, we have for intraday, and we have for swing trading. It's the same strategy, it's just used on different time frames. But okay, so yeah, those are the indicators right there. Khalil, you know, if you're interested, go ahead and go to our website and then you can get access. But yeah, let me keep going down to the other questions. All right, let me see what else we got here. Khalil, the course is, so we have a trial going on right now for new members. So if you haven't signed up to K2 before, you have access to it. It's $50 for the first month. And then the normal rate for the course is going to be $150 a month. So if you go to the website at k2trades.com, scroll to the bottom, and then you can see right here, we have the $50 trial, but normally it's at $150 a month. And then if you want to order for a year, then it'll be $100 a month. So that's for access to the course and the indicators. So let me keep going through the questions. All right. Michael said AJ's looking bearish right now. Let me pull it up real quick. Yeah, man, I hate when that happens, bro. Like hit it and then it dropped. Well, it came back up again. So I mean, we would have gone a soft out regardless, seems like. Or if it kept pushing up, then we might have. But I don't know, man. It's weird because COVID news came out, so you would think that JPY would be strong. But I guess since the Bank of Japan news is coming out today, you know, a lot of people are just they're just sitting out the market, or something else was affecting it. I don't know. Honestly, we got stopped out. I'm just gonna take that L and then, you know, move on to the next one. Khalil's asking, will I have to use this on PC? No, if you have a phone, you can have the TradingView app on your phone, and then you can still run the same thing on there. I mean, obviously, we prefer that you use a computer because you have a bigger screen, you can do more stuff on it. But if you want to do it on your phone, a lot of people here do it on their phone as well. It's just really up to personal preference. All right, so let me go down to the questions. Anonymous attendees asking, will the pivot strategy be implemented into the daily? It might. So he anonymous attendees asking, will the pivot strategy be implemented into the daily New York Stock Exchange Open US 30 signal? So the strategy isn't really implemented because the thing is there's only one entry during the New York Stock Exchange. So the thing is we're going to go for that entry opposed to a pivots entry. So let me go to US 30 real quick. So what he's talking about is the K2. So we took both entries today, actually. So in the case of today, where our entry hit a stop, like the entry didn't fill, and then it hit stop loss, because technically this would have been the entry here. So let me just go over the K2 daily US 30 strategy. It's real simple, guys. So pretty much, let's go here, that blue. So this is the K2 daily US 30 strategy. So pretty much this is during the New York session. So look for entries after New York Stock Exchange Open, which is 6:30 a.m. Pacific Daylight Savings Time. And then identify first valid K2 signal, and then enter on open of following candle. So this is going to be the strategy for the daily US 30 strategy. So pretty much what we're doing is we're waiting for the first entry after the New York Stock Exchange, which is at 6:30 a.m., which is right here. So this is when the New York Stock Exchange opened right here. What we do is we'd look for entries after the New York Stock Exchange open. So after this point, we're looking for entries. So we're going to identify the first valid K2 signal. A valid signal is going to be if we have a buy signal and it's a green bullish candle like it is right here, or if it's a sell signal with a red bullish candle like it is right here. If it's right here where we have a green buy candle, but it's a red bearish candle, so they don't match, that would be invalid. Similar to right here, we have a sell signal, but it's a green bullish candle. So this would be invalid, this would be invalid, this would be valid, and this would also be valid. So with this entry, this was the actual entry right here. The thing is, I called it a little later because price generally retraces after entry. So I called it a little bit later. It never filled. What happened was we canceled this order. And then instead of taking that trade, we ended up taking the pivot strategy, which was right here. So let me just, so I'll have this right here, and then I'll also describe the pivot strategy as well. So this is a daily K2 US, the K2 daily US 30 strategy, and this is going to be the K2 pivots strategy. So this is the scalp version of it because we're on the 10-minute chart. It's the same strategy for all time frames. It's just a different time frame. I mean, it's the same strategy on all time frames. It's just, you know, we're trading on a different time frame, so that's the only difference. So I'm going to color this black. This is going to be, first requirement is identify the trend. K2 pivots indicator. Let's close this right here. So first we identify the trend. Next, identify pullback, rejection of K2 pivot zones. Last, identify valid K2 signal. And then lastly, enter on open of the following candle. So it's pretty much the same for a lot of our strategies. It's, you know, our catalyst for every entry is going to be a valid K2 signal. So right here was the daily K2, the K2 daily US 30 strategy entry. We didn't take that because price ended, it never came back down to entry. So our order never filled. So we ended up taking the pivot strategy instead. So for the pivot strategy, you want to identify the trend. In order to identify it, you're going to look at the K2 pivots. So let me just replay it from right here. So basically, if you're applying the strategy, you're going to identify the trend by looking at the K2 pivots indicator. In order to identify the trend, you want to make sure that the pivots are spread out like they are right here, and they're angling in the same direction. As you can see, if you look closely, all the pivots, so this is level 1, level 2, level 3, and level 4, they're all angling up and they're spread out. So this signifies that there's a strong uptrend. Similar to right here, you can see the pivots were all angling up and they're pretty spread out. So it was a pretty strong uptrend and it pushed up for a pretty long time. And then again, right here, price came down. It was, pivots were angling down and they were spread out. So you can see right here, price went down for a while as well. So same situation here. We've identified an uptrend because the K2 pivots are spread out and angling upwards. Next, you want to identify a pullback rejection off the K2 pivot zone. So as you can see right here, price shot up, came back down right here for a retracement, and then rejected off this area right here, which was within the K2 pivot zone. So the second requirement has been met as well. We've identified the trend for requirement number 1, and we've identified a pullback and retracement right here for the requirement number 2. Lastly, you want to identify a valid K2 signal. Right here, we have a buy signal, and this is valid because it's a green buy signal with a green bullish candle. So these are both green and green. That classifies as a valid K2 signal. So once the 3 requirements are met, you can enter on the open of the following candle. So right here, we're going to enter a buy. And generally, we put the stop loss of the previous swing, which would be right here. But if we're trading during New York session, I like to keep it at a 1500 pip minimum. And I'll show you guys a signal as well, because this was actually, let's see. So this was a signal that I gave the K2 premium members earlier this morning. All right, so right here, pull it over here. Right here is the signal that I gave this morning. It was a K2 US 30 pivots by limit entry. And you can see right here, it's the same setup. So you can see that setup right there, same exact image right here. So we entered right here. And then I sent that, and then pretty much if we let this run, it would hit entry right there. So this is one of the, you know, rare cases where we would take this, we would take the pivots entry instead of the daily, but that's only because the daily entry didn't fill, and it never did. So right here, you know, it never fell down here. Price never came back down. So regardless, it would have never filled. If that's the case, then yeah, we'll go with the K2 pivot strategy. But the K2 daily US 30 strategy is always going to be superior among, you know, any other strategies that we apply, because we've already been using this for the past, well, like 3 to 6 months, and you guys are familiar with the results and they're super accurate. So that's why this would always take precedent over the K2 pivot strategy. But if if there ends up being an entry available, then yeah, obviously we would take this. And it worked out perfectly for us right here. I kind of wish we didn't put a stop loss or a target, because we could have rode this way up here for like 5,000 pips. But I mean, this is a super unusual movement. This doesn't normally happen. But I'm happy with the profits we made today, so we're pretty much good for now. So let's see what else we got here. I think that's about it for this. I'm gonna keep going down the questions real quick and see if there's anything else that we need to cover. All right, so we went over that pivot strategy question. I want to get some water real quick. Miles asking, can you look at gold? Never seen you mark it up before. Any particular reason? I just don't trade gold. I used to trade gold before, but not really. I mean, if you're trading US 30, there's really no reason for you to have to really, like, if you get really good at US 30, like how I've gone, there's really no reason for you to trade anything else. I still trade Forex, but it's not my main priority. My main priority is US 30, because literally one US 30 win covers a whole week of Forex trades. So if I can win like 2 or 3 of these, I'm set for like the whole month. It's the same with gold. Like gold is worth higher than the Forex pairs as well. But the problem with gold is that it's not always crazy volatile like US 30. So the thing is with US 30, we know when it's volatile. It's volatile during the US session, like right here. And this is the only time I trade it. I started trading it during Asia session, but you can see right here, price barely moves during Asia session. Like Asia session and London session, it doesn't move as fast as it does during New York session. See right here, this is New York session right here, guys. This is where it moves crazy. Again, right here, this was Asia, this is New York session right here, and then it followed through to Asia. So the main reason why I don't trade gold is because it's just not an asset that I like to trade. What I always recommend is, you find something that you really like to trade, like something that's highly volatile, and just master it. Just get really good at it. Especially during right now, because the problem with the market right now during the summer is like, what I mentioned earlier, the market moves in season. So during the summer, the Forex market is extremely slow. So during those times, you have to find something that you can actually trade, like US 30. This moves literally all day, every day. Like there's never a dull moment for US 30. Here, let me pull up gold. I still trade gold, but I could give analysis on gold, but I personally don't trade gold myself. But just looking at gold, see, it does move pretty decently, but it's still kind of similar to Forex. It's like trading a fast Forex pair. So if you trade like Euro NZD, something that moves fast, like pretty much all of the NZD crosses. So odd NZD moves a lot. You compare this to odd USD. Look how slow it moves. You literally can't make any money trading this unless you're scalping like a ton of times, because you can see right here, price barely moves. It doesn't move how it used to. Like right here, it would move like 100, 200 pips. Right here, it's only moving like 30, what is it, like 30 to 60 pips max in a whole day. Actually, odd USD is a fast moving pair because it's a major pair. But if you're looking at like odd CAD, look at this thing. This thing moves like 30 pips in like a whole week. Like it makes it nearly impossible for you to really make any good entries off that. And the problem with the Forex market too during COVID is that everything is highly affected by COVID news. So the thing is, you have to like put fundamentals into play, like the JPY pairs, the CHF pairs. Whenever COVID news comes out, it could highly affect that pair. And the thing with COVID news is that it's never really scheduled. So if you're just trading and then randomly you just see a huge spike, that's something that you can't really predict or avoid. Similar with gold. Gold is something that's highly affected too, and that's why I stay away from it during COVID. So let me go to gold real quick. So gold right here. So gold's going up because all of the bad COVID news that's been coming out. Generally, gold is considered a safe haven currency, so similar to the JPY and CHF. So those three pairs are heavily affected when COVID news comes out. So you know, here I'll do an analysis of what I see here. So you can see right here, I have the SRs enabled. Pretty much what I do here is I'll just I'll draw my zones. So instead of having those SRs on the chart, I just draw where the closest zones are. Looks like there's no resistance coming up soon. And that could just mean that price is ready to come back down. So I'll just take off the SR so it's easier to see. And you see how easy it makes for the chart for you to plot like the zones on the chart. Because the thing is here, you're kind of like guessing where the zones are. But if you have the K2SR, you literally have the zones plotted on there for you. So like what I'll do is I'll just draw my zones over the K2SRs like this. Like this. And then the thing is, when you take off the K2SRs, that's how your chart looks perfect. You can see price came up, rejected, came down, rejected, came up, rejected, came down, rejected, came up. And then you see exactly where the rejection points are. So if you have the K2SR, you're able to see where price is likely to reject from. So the thing is, if right here, we have it's a false buy signal. So in order for it to turn valid, this would have to be a bullish candle. It close green. And then if it closes green, odds are it's probably going to continue on upwards. But if not, and it closes bearish, then it might come down and test the support again. And this is what I mean about it kind of moving like other Forex pairs. You can see right here, it's kind of consolidating. It's not really, it was directional for a while, like over here. So if you didn't have these zones right here, you wouldn't be able to see. So let me, let's check this out. I'll take this off the indicator. So if you're just looking at the chart without the indicators, you can see this looks like a strong push up, right? But if you have the indicators and you draw the zones, you can see that this wasn't a clear push up. You know, it's an illusion because you're not really looking at it in that perspective where you can see the consolidation right here. But if you have the zones up right here, you can see that price obviously consolidated a little bit, came up, consolidated, came up, consolidated, came up, consolidated again. So if you didn't have these zones lined up, you wouldn't know that price is in consolidation right here. You probably could have, you know, eyeballed it, but if you look at it from our bird's eye view, it looks like it's in a strong uptrend, right? This way. So if I was to draw this, it looks like it's in a strong uptrend, but in reality, it's consolidating right here. So if I take all these off, it looks like it's an uptrend. But if you keep the indicators on, it's in consolidation. So the problem with this right here is price can go either way. You know, there's no catalyst really telling you the direction of price. You know, obviously the Japan news is going to be bad. So if it's bad, this might go up further. But, you know, who knows? The fundamentals haven't really been playing out as they normally do. So this is what's up with gold right now. It's in consolidation right now, sideways. So I wouldn't really trade this until price broke out of this zone. So until price breaks above or breaks below, then I would trade in that direction. But the thing is with price right now, it's going sideways. So it's not really, you know, there's no real direction that's been established just yet. So if you're looking to trade gold, you know, I'd probably hold tight and wait for, you know, actual movement, because the news is probably happening from now until 10, because that's the Japanese market. So the Japanese market's open till 10. You probably have 4 hours until anything can happen with gold. Let's see. See if there's any other questions here. All right, Miles. So I hope I answered your question. If you have any other questions, you know, feel free to let me know. Let's see if there's anything in there. Sure, no problem, Miles. Let's see if there's any other questions here. So I see a couple questions in the chat. If you guys could put those in the Q&A, that'd be great, because I'm going down the Q&A for the questions. I'm not really looking at the chat. So I do see there's a couple questions here. I see Brenton is asking for S&P, but I also saw that he put it in the Q&A. Let me see if there's anything else here. Omarian's asking if we can look at S&P. Yeah, so we're gonna look at S&P next. That's next on the list. See if there's anything else here. Sierra's asking, can you go over your Euro NZD? Okay, perfect. So I think she put it there too in the Q&A. So I have all the questions in the Q&A right now. So I'm gonna go over S&P right now. That's the next question, and then I'll continue to move down the list. We have one more question from Mimi. Mimi, she's asking, what's the best time frame to take signals from? So personally, I like to trade on the 4 hour because I feel like the 4 hour gives you it gives you proper direction. So the thing is, there's less noise on the 4 hour. You can see right here, you know, obviously you can see where price is consolidating and when it's actually moving directional. If you go in the lower time frames, like the 30-minute, look at how like choppy the market looks. It doesn't really, you know, it's hard to tell if it was in a downtrend or if it's going sideways or if it's going upwards. But it just really depends on your trading style. You know, before I used to only trade on the 30-minute chart until I realized that there's a lot of noise on the 30-minute chart. And you get caught in a lot of fake outs. So me personally, I think the higher the time frame, the better. I wouldn't trade on the daily because I trade intraday. This is way too much time for me. I don't like to hold trades for more than a day. 8 hours is a little farther too. So I think that 4 hour is the good sweet spot. This falls between intraday and swing. If you want to go strictly intraday, you can do the 30-minute or the 1 hour, but you would just have to figure out what your trading style is. So if you want to take more trades, obviously you could trade on the lower time frames because there's going to be more entries on the 30-minute opposed to trading on the 4 hour or the daily. You know, if you want to push up a little further, you can go to the 1 hour, and you can do the same thing there. But me personally, I like to trade on the 4 hour. You don't have to trade on the 4 hour, but I think the 4 hour is probably one of the most accurate time frames to follow, you know, with regard to any pair. It's not just gold or US 30. It pretty much works for everything. But also the main difference with trading on the higher time frame is that you're going to be going for bigger moves. So if you can't handle the risk trading something like gold, because you can see here on the 4 hour candle, you know, each candle moves like 1,000 pips or 139. I'm not sure how you calculate this because I don't really trade gold, but it moves a lot farther than it would on the 30-minute. So if you look at the 30-minute, each candle only moves about, you know, 500, 600 pips compared to the 4 hour. 4 hour is 4 30-minute candles. So, you know, you multiply that by 4, one candle moves about, you know, 1,000 to 1,500 pips. So the problem with that is if you're trading this on a small account, then, you know, you're not going to be able to eat the margin. So that's something that you also would have to take into consideration depending on what you plan on trading. But yeah, let's go over the S&P now for you guys. Some water real quick. So S&P. So like I mentioned, guys, I like to use the K2SR to draw my zones, because it just makes things a whole lot easier. Because the problem is a lot of people, when they try to draw support resistance or their zones, there's so many areas where you can put it. Like you can put it up here, you can put it down here, you can put it down here, you can put it over here, over here. There's so many places to put it. And the thing is, you never know where is the right place. So with the K2SR indicator, this takes out all the guesswork because the indicator calculates all the data on the chart and it gives you the strongest support resistance. So the thing is, these support resistance have been tested at the same exact price point. So you can see right here, this price point is 3068.8. This exact price has been tested sometime in the past, or sometime, you know, between this time period that we have. The thing with a normal person is you can't see that with your naked eye. So see if we take all this off right here, there's no way that you could have identified this as a strong resistance or support line, right? You have the K2SR, it lines it up perfectly. So this is like a huge key for you to it's a huge tool for you to use. Like it's very key that you know where price is going to reject from, because obviously if you can't see this up here, you might have taken a buy here and you've gotten caught in this reversal right here, or similar with right here. There's no way that you could have identified that this was going to reject off so nicely. It came down and then rejected off this wick off a huge zoned area, and you could have taken a buy right here. Thing is, if you don't have the indicator, how would you be able to spot that? It's impossible. But yeah, so I'm going to draw the zones real quick before we analyze it, just so I can see where price is likely to reject from. So we've got a zone right there. We've got a mini zone right here. You don't have to draw these zones, but the thing is I like to know exactly where the zones are just so I could have a good understanding as to where price is going to reject from. So right here, we have a ton of zones that are bunched up in one area. So what I do is I just create one big zone right here. So I know not to trade in this area because you don't want to get stuck where price is consolidating. But yeah, okay, so I'll take that off. So once you know where the areas where price is rejecting from, this is where you can tie in other indicators. So on top of this, I'll use the momentum indicator so I know the direction of price. So you can see right here, we had a buy momentum right here. Price came up. The thing is, price came up and then it looks like it's trying to test this area up here. So the cool thing is, since we have this already marked up, we know exactly what the scenarios are. So price can either reject off here or it can break above and shoot upwards. So let's see, I'm gonna move this up right here. So the thing with this right here is price can either come up here and reject off this for a triple top or a quadruple top because it tested 1, 2, 3, 4. This would be the 5th time actually. So the thing is, it could reject off here, or if it breaks above, we can see a nice push upwards. And this is why I wouldn't take this trade at this time. Like I would wait for it to close above the zone. So if this bullish candle closes above the zone, then you can anticipate it to shoot on upwards. An example of this right here is this right here. So price came up right here. We had a buy momentum, and as price closed above the zone right here, you could have taken a buy right here and rode this on up to the next zone over here. So you could have caught this trade from right here, and you could have exited right before for about 300 pips right here. You could have just moved your stop loss right below. So if it came down, you'd have gone stopped out and profit, or you just put your TP right there. So, currently just looking at S&P right now, it looks like it's literally dead. I could even go. So this is the cool thing. Once you mark things up on the higher time frame, you can just go on the lower time frame and do your own analysis here. Same situation. So you can see right here, the S&P, you can literally go in either direction. So it looks like it might have hit some, it looks like it's in consolidation right here. So it's going sideways. And then from here, it can either go up, test this before coming down right here, or it could break below right here and then just come down and test it right here. So there's so many different scenarios that can play out with S&P right now. And there's just too much uncertainty where I wouldn't enter this trade. So like one thing you guys need to understand is that, you don't always have to trade. I know a lot of people want to trade like literally all day, every day, but there's some times where it's best just not to trade. If you don't have an edge in the market, then just don't trade, because at that point you're just gambling. You're gambling and praying that price will go in your direction. You obviously want to trade when you have an edge. So I'll show you an example of that. So right here, let's draw this on right here. Right here, people would have seen this buy right here and might have wanted to take this buy. But the thing is, you don't have an edge here because, like I mentioned before, price could reject off this point like it did right here. So price came up, rejected off this point down, and it came up here. So once it crosses above the zone like it did right here, this would give you confirmation because the momentum is going upwards, plus you have a break of the zone right here. So this would be, if you guys are familiar with the strategy, this would be the K2SR zone trading strategy for intraday and swing trading. So if you want to learn the strategy that I'm discussing right now, it's explained right here in detail. So you can learn to trade exactly how I do. But exactly like I said here, you would wait for price to break the zone right here. So once it broke the zone, you have an edge here because you have the buy momentum. So you know that price is going upwards. You knew that price broke the zone right here. So this is a critical zone. And then the next zone is way up here. So if you have all of those tools in your toolbox, you could have read this all the way up here. So if you took a buy off this entry right here using that strategy, our odd CHF hit TP1, guys. I'll post that up right now. Nice. So we hit TP1 for odd CHF. But like I mentioned earlier, see, if you took this entry right here, you could have literally rode it up to 900 pips, or you could have rode it all the way up to the resistance for 1400 pips. It's really up to you. And then right here, again, you have another edge. So this is the next edge. Right here, you see the rejection off this point. You would have the zone plotted already, and then you'd have a sell signal here. The thing is, there's a huge open zone right here. Like this is open field. There's no support resistance here because this wasn't established till way down here. So technically you have open field right here to take this entire move. because you could have just taken a sell signal right there. You could have taken this sell signal or this sell signal. You wouldn't take this buy signal because obviously resistance is right here. Why would you, buy right before the resistance? You'd wait for it to break above. But right here, if you took this sell, you could have made about 5,000 pips. Again, right here, another 5,000 pips if you took both entries. But yeah, going back to S&P right now, I just don't really see any entry. I think Miles said that he had a sell. Let me check the chat real quick. Oh, Marion. So Marion said, can you look at SPX? I'm in for a sell. So, well, like I mentioned right here, it's actually in a buy bias because we have a buy momentum signal right here. But you might be in a good spot if you're not, close to stop loss because, like I mentioned earlier, the resistance is really close right here. So the thing is, price can come up and then reject off the resistance and come back down. But if it breaks above it, like it did, right here, or like right here, you might be in some trouble because it might shoot up further. But right now, I'm still going to stick to the buy bias because we do have a buy signal. Until we get a sell signal, then I'll be biased for a sell. I'm not sure why you entered a sell yet. It looks like you might have tried to call a top right here. That's a big no for me. Like I don't like to predict where price is going to reject from because that's how institutions trick you. The thing is, the institutions know that everyone's looking to sell right here. You have to think in the shoes of the market maker and the steps of the institution, because the thing is, the institution is looking at what the retail traders are doing. So this is what retail traders are doing. They're trying to predict the top right here, right? So the problem with that is that if there's a lot of people predicting the top right here, what the market makers are going to do, they're going to spike price up this way to stop everyone out. Because if you're entering a sell right here, where's your stop loss going to be? It's going to be exactly right here, right? So predictable. And the thing is, that's why at K2 we don't trade like other traders. We trade how like the momentum. We trade with momentum. So basically, what we're doing is we're identifying where the market makers and institutions are trading. So the thing is, if we see a huge move like right here, then we'll catch that ride down. If we see a buy right here, we're going to catch this ride down. We're not trading how other traders are. A lot of other people try to trade where they think price is going to reverse from. So right here, you can see price rejected off this point. I'm sure a ton of people took some sells, right? So right here, you would have taken a sell. Your stop loss would have been somewhere around here, correct? So in that situation right there, the market makers know exactly what you're looking at. They know that all these people are trying to put sells in right here. So as all the retail traders put sells in this area, they spike price upwards and then they stop everyone out. Same situation right here. Some people would have got burned right here. So it's all trade psychology. If you get burned right here, are you going to try the same situation here again? Probably not. And this is where people missed out because the market's literally playing games on you. So right here, it stopped you out. Right here, you wouldn't have taken this because you were scared to enter this trade. It came back down right here. And then what happens right here? You FOMO out, right? You're like, fuck, I should have just took that sell. So what happens? You try to enter the sell right here. They give you a little gimme right here, and then they push price back up and pretty much stop you out again. And this is how the market plays games on you. So, I'm not sure how you took this sell right here, Omarion, but this situation, this is just not how I trade. So personally, I wouldn't have taken a sell right here because we have a buy bias. And just depending on how sentiment is, let me check sentiment right now. So this is the sentiment for. So this is how you could determine where all the retail traders are trading. So I'll do IG sentiment, SP 500. And the thing is, you don't want to trade in the same area or direction that everyone else is trading, because you're going to be caught in areas where price is being manipulated. Okay, so right here, there's 59% of people are shorting. So you don't want to be in this group of people, because the thing is, the market makers know where everyone's trading. So if there's 59% of people are shorting right now, let me just share here. So the thing is, a lot of people are shorting right here because they're trying to call a top. What's going to happen here? What's going to happen is probably the market makers are going to spike price up. So they're probably going to drop it a little bit. They're going to give you a couple red candles right here. Like right here, you can see price came up, gave you a couple red candles to think that price was going to reject off this zone and shoot down. But what happened? It ended up shooting up right here and then stopped everyone out. So that's probably what's going to happen here. It's probably they're going to give you a couple red candles right here. And then when you least expect it, they're going to shoot it up and stop you out. You kind of have to think outside the box when you're, especially when you're trading something like the S&P or other indexes, because these are highly manipulated markets. And this is kind of why I prefer crosses over the major pairs too. You'll see that your USD gets manipulated a lot. GJ, maybe not so much, but all the major pairs. So you'll see like EU get manipulated a lot, AU, UCAD, USD CHF. But that's why I prefer to trade other pairs like GN. See, GN moves a lot smoother. It's less manipulated because it's not a major pair. You kind of want to trade where there's not as many people trading, unless you have some sort of edge like what we do with US 30. So I'll go back to S&P. But yeah, personally, I would just avoid this trade right now. If you're not in this trade currently, I would just sit out and wait for price to. You have to wait to see how the markets react to these critical zones right here. So the zone right here, I wouldn't enter until it broke above, because I wouldn't have any confirmation that price is either going this direction or going back down. So yeah, I'm not sure where you are with your PL with S&P, but I would just consider this a very risky trade to be holding right now. But yeah, okay, so let me keep going down the questions. That's S&P for a majority of people here that asked that same question. Let's see what else we got here. Lester's asking, will it be filled a gap? Hey Lester, which pair are you talking about? Let's see if Lester's still here. Oh, US 30. Okay, cool. So let's go to US 30 real quick. The problem with US 30 is that this move was caused by the stuff that was going on in the world today, because Biden spoke, there was COVID news, Trump spoke. So that was a huge bullish move that was caused by the stuff that was going on earlier today. So I don't know, it's kind of hard to say. Like, the thing is, I would expect it to correct back down, because this is super overextended. This is when the market opened today. This is a crazy move from today until right now. Price has moved 9,300 pips. That's a huge move to happen in one day. This only happens when something crazy happens, which, I mean, I guess Trump spoke, so I guess that, obviously that affected the market. But yeah, if we're looking, because right now we're looking for the Asia entry, right? So if we're looking for the Asia entry, the next signal is going to be a sell signal, because our previous one was a buy. So technically, if we get a valid sell, then I would consider it, filling the gap like you mentioned. It might come down pretty hard. So I would probably keep watching it. I have my alert set up right here. So, if we're still live by the time we get to that point, then I'll call the signal. But I probably wouldn't be taking the signal. It's probably going to be an unofficial call, because whenever something like this happens, it's really unpredictable what could happen next. They could either push price down heavily, or they'll push price even further up. I'm not sure if there was any other news that happened. Let's see. So we'll go to the news real quick. Top Federal Reserve officer is starting to brace for prolonged recessions. This isn't good news. So yeah, it might be coming down. Lester still on Forbes. Let's see, top Federal Reserve official is trying to brace for. But the thing is, the fundamentals don't really play out as they should. Powell and who is this? Mnuchin giving some elbow bumps. So it looks like I mean, it's not good news. Look at NFP, bro. Like, non-farm payroll, this thing dropped like crazy. Unemployment rate super high. I mean, there's nothing really good in the news right now. We have a signal right there. Yeah, I don't really see anything good. So technically it might drop, but who knows? The problem with this too is that the news isn't always a good determining factor as to the direction of price, because even though it's bad news, the US 30 will still shoot up like crazy. So it's kind of hard to determine the direction. Let's see if there's any other news was released recently. Let's see, here's consumer sentiment drops again. So this is all bad COVID news. You know, in a normal world, if this was happening where it's back to back to back bad news, you would see US 30 dumping like crazy, because it's not good for the economy. But I mean, we'll just have to wait and see. So it's going sideways, so I would wait. See, when this happens where it goes sideways like this and consolidates, this usually means that it's charging for a breakout in a direction. So the thing is the market's messing with people right now. It's trying to lure people in. It's luring buyers and sellers. So if there's more sellers, odds are market maker is going to push price up to stop everyone out. If there's more buyers, they're going to push price downwards to stop everyone else out in that direction, because obviously, you know, they want to make more money and the only way to make more money is to stop these people out, because they'll take over the positions. Similar to what happened right here. So you can see right here, price consolidated, breakout. Again, right here, price consolidated, breakout. Price consolidated again right here, breakout. It's just pretty much how it moves. And you know, that's what I expect to happen up here too. Prices consolidation right here. It's going to determine the sentiment, if there's more buyers or sellers, and then they're going to shoot price in the opposite direction. Let's see the sentiment. I think I have it. US 30, IG sentiment. See, this is tough. There's 71% of people are short. So the thing is, a lot of people are thinking the same thing you're thinking, Lester. Everyone's thinking that this has to, it's gonna have to fill the gap. The thing is, what they might do is they might bring price a little lower, like up to right here, like where the K2 pivot is, and then skyrocket that thing up heavy and stop everyone out. You know, that's a common trap that a lot of people get caught in. So personally, I would just stay away from US 30. This is way too much movement for one day, where literally anything can happen. They can manipulate the market in any direction, because they can push it down heavy and say that they were filling the gap, or you know, there's an analysis for everything. Anyone can explain something in a certain way for it to make sense. They'll say, or you know, there could be a new vaccination that came out, or you know, whatever type of update, and they'll say that it's about time for the vaccination to come out. If that happens, they'll just shoot price upwards and stop everyone out in that direction, because there's majority sellers. So it's not something that I would like to trade right now, just because of how the market's moving. You know, if the market was still moving directional like it was right here, then yeah, I would take the trade. But the problem is it's not. It's moving sideways, so it can literally go in either direction. So I would probably hang tight. I wouldn't take any trades right now. I'll send out an unofficial trade if I see something, but personally, it just looks way too risky for anyone to take right now, because the thing is, like I showed you here, there's 71% of people are short. So this could, you know, this could cause a lot of issues in the market with regards to, you know, how people are analyzing it, and you just don't want to get caught in that crossfire. But yeah, let me keep going over here real quick. Joel's asking, I never use TradingView. Is it easy to use and install your indicators? Yeah, Joel. So you don't have to install anything for TradingView. It's just a website. So you go to tradingview.com. So when you go to tradingview.com, this is what the website looks like. And then you just log in. You know, I'm logged into K2 right now, and then you just click chart, and then the chart will open up like this. And then if you want to add the indicators, you just go to indicators up here. And then if you have access to the K2 indicators, you'll click on invite only scripts right here. And then you'll have all of the K2 indicators right there. So it's real easy. You just click on them. So you click on pivots, and then it adds the pivots on the chart. You want to add the trend meter, it adds the trend meter to the chart. It's easy. Delete that. And that's pretty much how you add everything to the chart. Khalil's asking, when you get a buy or sell signal, does it give you the sniper entry with little or no drawdown. I mean, there's different strategies to use, Khalil. There's not just one strategy. I mean, if you wanna apply the original strategy, this would be the original strategy, where you just match. All you're doing is you're matching the colors. So if you get a green and green, like right here, you just use a long positioning tool, and then you have it set up right there. And look, it hits TP right here for about 1900 pips. Again, right here, you have a green signal down here. You enter a long position right here, another winner again for 1900 pips. Another one right here, green and green, right? Enter a long position, another 1900 pips. I mean, I don't know, could it get any easier than that? But you know, obviously it's not always gonna hit. Like it's not guaranteed. So you shouldn't see trading ever as a guarantee. I think that's a big misconception a lot of people get. You know, the K2 strategy is very accurate, but it's not always 100%. But if you go on the website, you know, there's multiple strategies that you can apply. There's not just one. There's a ton of strategies here. So it just depends on what you want to learn. If you want to learn the normal intraday strategy that I just showed you, it's explained right here. If you want to learn the momentum strategy, it's right here. Scalping strategies, zone strategies, pivot strategies, they're all here. So it just depends on your trading style. You know, if you want to learn this strategy, you can learn this. This is probably the easiest one. And then you could tie in other indicators. So you could tie in the SR indicator so that you know where not to trade. So you can see right here, this was a loss, right? Because it's red and red down here. Well, let's rewind and see if there was any zones there. So right here, you probably would have measured this to see how far it was from this point. And it looks like it might have been a little too close. So the thing is, if price is too close to these zones, you probably wouldn't take the trade. Because so for US 30, you kind of want enough space. There's only 800 pips here. The problem is when you're trading this, say on Hugo's way, your spread's going to be like 400 pips. So you won't even make profit until you're halfway down here. And at that point, you're already right next to the support. So you probably would have just avoided this trade right here. And it would have been a good idea because price ended up reversing. So it just really depends on the strategy that you're applying. I mean, there's a lot of ways to minimize your risk, but you know, this isn't some indicator where you're just gonna, like you're saying, it just gives you a sniper entry. Like there's an entry there, but it's gonna be on you whether you take the trade or not. You know, you're not automatically gonna take every single trade that appears. And you know, I'm not gonna take every trade either. Like this right here, like I just explained, the support was kind of close, so that's why I wouldn't have taken that trade. But, you know, it could have been different for any other entries. Let me see if there's another one here. So I'm like purposely looking for bad trades because I want to show you how you can avoid entering bad trades. So right here, you know, we have a couple of good entries. This is probably a winner because it shot up. This looks like this would have been a stop loss right here. This right here looks like it would have been a winner right there, a winner right there, possibly stop loss or a winner right there. But okay, so let me I'm gonna go back to this point right here, and I'm gonna see if there was any way that we could avoid losing from this trade. So this is a valid entry here, but this was obviously a loss, right? So let's turn on the K2SR indicator. See, this is exactly why you wouldn't have taken this trade, because there's a bunch of zones right here. So what happens when there's a lot of zones? Let's draw a big zone right here. So this whole area was zoned out. Even though there was a valid entry right here, it was green and green, I wouldn't have taken this trade because there's a huge zone right here, because price is likely to reject off the zone, correct? So if we move forward, look what happens. It rejected right off it. So that's why we wouldn't have taken that trade. So we would have avoided this loss right here. Similar to right here, we wouldn't have taken this trade because there's a zone right here. So if I take these SRs off, see, we wouldn't take this trade right here because what happens is price rejects off these zones. And there's a ton of ways that you can apply to, you know, maximize your risk. But, you know, trading it's not a game where you can just win every time. You know, I give you all the tools here, but you have to be able to use these tools properly to you know, be a good trader. Like I've been trading for 10 years. This isn't something that I learned overnight where I could just, you know, click and win. Literally, like all these indicators were developed by me from scratch. So normally this is what, you know, a chart would look like. But if you have the K2 indicators, it gives you that cheat code where you can, you know, easily take trades. But I still make mistakes too. There's literally no guarantees in trading. For Forex, I use Forex.com, and for indices, because they're not available on Forex.com, I use FTMO or Hugo's Way. Khalil's asking, do you ever trade against what the signal tells you because the zones are so close, or it's a very strong possibility it will reject? So I only trade if there's an entry. Like I mentioned before, you should only trade if you have an edge in the market. You're not just going to take a sell because there's a zone there, because the thing is, even though there's a zone here, it's not guaranteed that price is going to reject off it. So right here we have a valid buy, right? And it's close to the zone right here. I wouldn't have taken the sell because there's no sell signal. Like you shouldn't take random trades just because it's rejecting off, because if you did that, you would have been screwed because price shot up again right here. And that's why you have to follow the strategy. You can't just take lucky guesses or random trades just because you see a zone there, because the thing is, price doesn't always reject off the zone. It was like I mentioned before, the market makers know where these zones are. So the thing is, if you're trading where the zones are and you're trading like everyone else, because like I mentioned earlier, people would take a sell here because they thought that price was going to reject off here. The thing is, I wouldn't sell up here. I would sell down here. Even though I would have lost out on these pips, I would have confirmation that we have a sell signal right here. So that's why I would have taken a sell. But like I mentioned before, there's multiple strategies here. There's not just one strategy. So the thing is, if one strategy doesn't work, you can apply a different strategy, similar to what I mentioned earlier. So when I was going over US 30 for today, we had an entry right here. So let me close this. So like I mentioned earlier, we had an entry right here, right? For the daily. The daily would have been a sell right here. This would be our entry. But the problem is price never came down to fill the order. So instead of taking that order, we switched over to the pivot strategy. And this would be a pivot entry right here. So instead of taking a sell, we canceled that. And then we entered a buy right here instead. And we ended up hitting TP. This is a situation where I would change strategies. I'm not going to take, so the thing you asked earlier was if you saw a sell right here and it was close to a zone, would you take a buy? I wouldn't take a buy just because it's close to a zone. I would take a buy because we had a valid entry for another K2 strategy. So there's a huge difference between taking a trade off your guess as to taking a trade off an actual entry. So I don't know if that answers your question, but yeah, like pretty much I wouldn't just take a random trade. If there's an entry, then I'll take it, but I'm not going to take a trade just because there's there's some sort of rejection off the pivots or off the zones. Let's see. Noel's asking, you don't use the trend meter? No. So depends on the strategy. So if you're using, so I'll go over the strategies right here. So the first strategy right here, the intraday strategy, use the trend meter because that's how that strategy is used. You have to use, so for that strategy, you're using two indicators. You're using the momentum indicator and the trend meter down here. And then you'll use the SR for extra confirmation. So these are the only indicators that you use for this strategy. The next strategy we have is the momentum pullback strategy. This is the same strategy, just different entry points. So in this situation, use the same exact indicators. We move on to the next ones. If we move over to the scalping strategies, for these, we don't really use the trend meter because we're scalping, we're taking short-term trades. So we just want to take momentum swings in specific directions. And that's why we're not using the trend meter for that strategy. The next strategy, the zone strategy. So the zone strategy, what we do is we trade on the 4-hour chart, and we don't use the trend meter because when you're trading on the higher time frames, you can see right here that price generally when it breaks these zones, it moves from zone to zone. So price shot up right here, tested this zone, came down, tested this zone, came up, tested this zone, consolidated a little bit this way, shot up to the next zone right here, reject off that zone, back down here. And you can see that price goes from zone to zone. That's why you don't need the trend meter on the higher time frame, because depending on what time frame you're looking at, price moves in a specific way. Generally, if you're trading on a higher time frame, the trend doesn't really matter as much, because what they do is generally they move from zone to zone. And that's why we don't use the trend meter for the SR strategy. And then lastly, for our pivot strategy, we don't use the trend meter for that one either. So for the pivot strategy, the indicators we use are the momentum indicator and the pivots indicator. And these are the only two indicators that we use for this. The reason we don't use a trend meter for this strategy is because the pivots are used for the trend, because we're using the pivots to identify the short-term trend. The trend meter down here shows you the long-term trend. So if you have access to this indicator, you can see the trend on 4 different time frames. I have it set to the intraday settings at 30-minute, 1 hour, 2 hour, and 4 hour. So I can see what the trend is overall. But since we're trading the pivots, we only want to see what the short-term movement is. And that's why we only use the pivots for the trend meter. But if you want to double up, you can always do that. If you line this up, you line the pivots up with the trend meter down here, you have a strong uptrend right there. So that's another way to use it. There's like a ton of ways that you can utilize the K2 indicators. Let's see what else we got here. Go down the questions again. The angle of the K2 pivots from that successful signal was insane. Yeah, I know. So for this one right here on the 10-minute, yeah, the angle on this was crazy. So this was the entry right here, and you can see that this was super spread out. Like, again, like this was a perfect uptrend right here, because if we rewind this to this point right here, you can see how spread out they were. They were spread out like crazy. Like you knew for sure this was going to shoot upwards, and that's why I called this. And then we, obviously we took that to the win right there, and then it just spread out even more. That's how, like when it's spread out like this is how you know the trend is like crazy strong. And then look how far it moved again, and that's how you know how strong the trend is. Let's see. No entry right now. Yeah, we're still looking for that nighttime entry for US 30, but I don't know if that's going to come anytime soon. Keith is asking, can you show the people my S&P call? Yeah, so Keith called S&P. I think it was let's see. Put up over here. It was see if I could find it. Hey Keith, do you remember what time you posted that? I know it was sometime in the morning. Said something like right here. There you go. Yeah, so Keith's strategy actually lined up with the US 30. He called it around the same time. So he has a, reload this. All right, so I'll go to S&P real quick. Yeah, so Keith called this at 10:46. Rewind this. So Keith called this at about 10:46, somewhere around there. Yeah, somewhere around there. Put a buy. It was a long position. His entry was at, see if I can find this. Entry price. Yeah, why is, oh no, it does from the second. My bad. That's why. All right, so he called it around here. Let me replay this. About, yeah, he called his buy right here. So he called the buy stop right there. And he was going for 1,200 pips, I believe, right? There's no fucking way. It was 120. That's like, It's a huge move. I think it was 120. It was just with regard to standard lots. So this was his call right here, I believe. Target was, oh, it's weird. Oh, it was 200. Oh, okay, you put R&R 101, 200. Okay, that makes sense. Yeah, so this is Keith's call earlier. He made this call the same time I made the US 30 call, which, you know, is pretty much the same exact thing because S&P moves the same way as US 30. And this is the call he made this morning. As you can see right here, straight to TP. Same situation with US 30. Right here, you can see that they move very similarly. So that was a pretty good call for S&P. You know, we can probably call the mirror trades for S&P too, because they usually hit pretty similarly. Yeah, exactly. So Keith said same time as US 30. So same exact time, you know, he called it at 9:40. I called US 30 at same exact time, 10:40. Oh yeah, 10:40. So 10:40 my time, 10:40 his time as well. So that was a good mirror trade right there for sure. Khalil said, this is some good stuff. How did you come up with all this? It was all through practice pretty much. You know, I learned how to trade on my own. So pretty much through a lot of trial and error, I just put together the best indicators that followed the way I traded. So, you know, I'm a trend trader and I usually trade off momentum. So the thing is, you know, from practice, just by looking at charts, I was able to identify these things. And then I was able to code the logic into an indicator so that you guys can see exactly what I see. Because basically I can see this stuff without all these indicators. Like if I take all this stuff off, I can see this stuff just from, you know, normal charting. Like if I was to draw trend lines here, I can see that, you know, price is trending up, and then I can, just by looking at candlestick patterns, I can see where momentum is going to be swinging. But by creating these indicators, I'm able to show you guys what I can see. Because, you know, obviously this is something that you can't really teach someone without a visualization, because it's just way too complex for someone without experience trading to learn something like this. But yeah, this is all pretty much from, you know, trial and error and a lot of practice on my end. Let's see. And yeah, I usually enter on the 4-hour chart. I used to enter on the 30-minute, but you know, I just didn't like staring at the chart all day. So I stopped trading on the shorter time frames, and then I switched to the higher time frames. Let's see what else we got here. All right, so we got a couple more questions here. Anonymous attendees asking for Euro NZD. I'm not sure if this is Sierra. Sierra's still here, but I'm gonna look at it real quick. So Euro NZD right here. It looks like it's coming down. It's rejecting off the K2 pivot right here. So it's above the pivots and it's in an uptrend. So it just pulled back for a retracement right here. What might happen here is it might reject right off this K2 pivot and correct back upwards. It looks like there's news at 2 a.m., but it's not really anything serious. Let me see if there's any other news that caused this retracement. I'm not sure what caused that retracement today. Let's see. China to implement sanctions on US officials. See, this is where it doesn't really make sense to me, because there's news right here for consumer sentiment drops again for COVID, and this is Australian news. So this isn't good news for Australian or NZD pairs. You know, it shows that consumer sentiment is dropping. So this is an unusual movement because it's paired with the euro. So you would expect it to continue upwards. And that's the reason why we bought this pair in the first place, because all of the euro pairs are going up for some reason. I don't know if there's something that happened with Europe news, but it looks like they're retracing slightly. They're not retracing very hard, but they're all retracing a little bit. And they all happen around the same time, about 10 a.m. this morning. Trying to see if there's a, so 10 a.m. this morning, that's about I mean, that was a long time ago. It was like somewhere around here. It doesn't really look like there was any news. Okay, maybe this, the ECB, but it's not really anything too strong. So if there isn't really any news that's pushing, price in that direction, then I expect it to correct later. So pandemic push European Central Bank into full clerical policy making. All right, so this probably might have affected it because it said that, I mean, this was in February, but it basically is describing that the European Central Bank wasn't taking COVID seriously. So it looks like this might have affected the market. This happened at 9 hours ago. So that's around the time that it started reversing. So that's when the news came out. This looks like it was influenced by, the ECB news. So I'm expecting it to probably reject off the K2 pivot, or, if worse comes to worse, it's going to come down to the support up here before correcting back upwards. Because it looks like right here, this looks like the bottom right here, right? So this looks like the bottom. It looks like it pushed up, and then it went for a small retracement right here. So I'm seeing it retrace, probably retracing to this point before shooting back upwards, or retracing to this point right here to create a higher high and a higher low before shooting back upwards. Because looking at it from a bird's eye view, it looks like it was already planning on recovering right here. So it came down, came up, came down, came up, came down, came up, came down, and then huge rejection right here. Unless this is, well, I mean, we'll just have to wait and see what happens from there, because the thing is, it's at a strong support area right here. So even if it breaks past this, it's going to have to test this other pivot down here, and then also this strong support area right here. So this area has been tested a lot of times, actually. So it's been tested. If we pull this back way down here, it's actually been tested 1, 2, 3, 4, 5. This would be the 6th time testing. So I'm not too worried about this right now, because obviously all of the euro pairs are going through some sort of retracement anyways. But they're all very strong bullish. So I would just sit tight with Euro NZD for right now and just see how it plays out in a bit. LaMonica is asking, are your trainings recorded? Yeah, LaMonica. So if you go on the YouTube page, let's see if I can pull it up. So if you go to you just go to youtube.com/K2Trades. It's our website there, youtube.com/K2Trades. Just go to playlists, and then you can go to K2 live trading rooms and trading webinars down here. So you can watch all of the webinars that we've hosted right here. We have a ton of them because we have this twice a week, and then they're all recorded right here. If you want to look at the strategies, we have the catalog of all the K2 strategies right here. Not all of them, but majority of them. And then if you want, the educational videos right here as well. We just have a ton of videos here. So if you want to go watch, our past trading rooms and trading webinars, you can find them all right here on the YouTube page. You can just go to YouTube, search K2 Trades, or you can go to youtube.com/K2 Trades. Let's see what else we got here. So let me keep going across. Sure, no problem, Monica. So let's see. We went over EN. Anonymous, can you draw the zones for US 30 so we can see where it might reject from? So that was asked about an hour ago, but let me see. I'll just look again. So right here, this is on the, depending on, let's see. I'm not sure who asked this question because it says anonymous attendee, but if you can tell me what time frame you want to see it on, I can draw the zones for you. The thing is on the 10-minute chart, like this is where we normally trade it on. I'll draw the zones here for you just so you can see. But if you want me to go on the higher time frames, I can do that too. So there's one zone right there. Oops. Like that. So that is one zone right there. We also have another zone down here, which is pretty far. There's not going to be very many zones that have been established yet, because the thing is, the price is in new areas right now. You know, like price hasn't been up here in a long time, it seems. Yeah, it's been a really long time since it's been in this area. So there's not going to be any established zones going back, you know, far in data, just because this area hasn't been tested yet. So in order for new zones to be created, that area has to be tested at that same exact price point, you know, more than 2 or 3 times. So these areas right here have been tested, you know, 1, 2, 3, 4, 5, and then again right here, it's been tested 1, 2, 3, 4, 5. And that's why those zones were created. But yeah, we would have to give it a little more time for it to move and determine the direction before we could, you know, establish more zones. Let me just post the results for AC real quick, because I don't even remember where that or actually we already did. Oh no, we didn't. Oh, Aaron did. Okay, cool. Thanks, Aaron. All right, so Aaron got that out there.
You're welcome.
Show and share this in the. All right, cool. See, so we got Brent said AU is on crack. So let's check out AU real quick. Damn, it pushed up a bit. So I think from the time we got on this call until currently, it shot up like 40 pips. I don't know what happened with it, but if we do get a buy signal, oh, we already have a buy signal, so it has a buy momentum. If this closes above this zone right here, this could be, you know, prime entry for a buy. So I'm just gonna mark that up for later. And then this candle closes in about 2 hours. You can see right there, 2 hours and 47 minutes. So we'll check back on that a little later. Lewis King's asking, how far away do you set entry for like earlier that didn't, how far away do you set entry for earlier that saw it? Yeah, Lewis, so if we go back to US 30, I'm pretty sure that's what you're talking about, because that's the only one that didn't fill today. So basically, this entry was a little late. So I didn't notice this because I wasn't waiting for it, because it was against, you know, a very strong trend upwards. So the thing is, I probably noticed this about 10 minutes later. So this was actually set over here. So by the time I set this, price was already way up here. It was about, you know, it was like about 500 pips away. But the entry would have to be right there where the signal candle closed, because that's where entry would have been. So pretty much the entry would still be the same. It's still being this specific price point. And then we would just put a sell stop, because we were trying to catch it back downward. So what I was anticipating was price to, you know, retrace up a little bit like it normally does, and then shoot down and then fill our order. But that's pretty much why we didn't take it. You know, good thing I caught it late, because if I caught it early, then we would have gone into this trade. But obviously, since I called it way up here, there was no way that it could have filled, because price was so far away from the entry. But I don't like a lot of people enter like a market order up here because they want to, you know, lock in some pips. I never recommend that, because, you know, in that situation, you still would have taken a loss instead of just being patient and waiting for, you know, for the actual trade to be filled. So that's pretty much how I determine, you know, how far away the entry is from the original entry point. But yeah, it looks like that's about it for the questions, guys. I don't know if you guys have any other questions. If you do, feel free to put them in the Q&A real quick. Otherwise, looks like I'll be getting off for the day. We've been on this for about, it doesn't even have time anymore. It usually has a time up here. I think I've been on this for about 2 hours now. So if you guys have any questions, feel free to put them in the Q&A. Otherwise, you guys can reach me on Telegram. So I'll give it a few minutes or a few seconds. Doesn't look like anyone has any more questions left. Yeah, if you guys want to sign up, I know a lot of you guys were asking about how to sign up. Just go to our website, k2trades.com, and then we'll have all of the options here. But yeah, guys, looks like that was it for our trading room today. It was a good trading room. Hope I answered all your questions. If you guys are new here, just remember we have this every Tuesday and Thursday at 5 p.m. So if you guys want to ask any more questions, feel free to hop on Thursday, and then we can pick up from there. Otherwise, I'll be available in the Telegram group. So if you guys have any questions, feel free to toss them in there, and then I can give you guys some responses. All right, guys, it was good talking to you guys. I'll catch you guys later.